All right. Good morning, everybody. Good morning, all you magnificent melonheads of the world. Happy Thursday, everybody. Today is February 13th, 2025. And once again, happy Inflation Day. We got the red-headed step data point of inflation numbers today. We got the producer price index, or the PPI. Doesn't get nearly as much attention as CPI does, even less than PCE gets. But it is important nonetheless. We're measuring inflation further upstream. What are the producers paying for their stuff? And that's important because, well, when the producers' costs go up, they tend to pass them on to us. And so PPI gives us a little bit of clarity into what consumer prices might be doing further down the road. And, well, much like yesterday when we were all surprised that inflation came in higher than expected, we've got the same thing today. PPI came in much higher than expected. But there is great news. And I mean, this is really just fantastic news. PPI went down. It's awesome. Inflation is going down according to the PPI statistics. The problem is, as my moderator Mish pointed out, the chocolate ration was increased to 20 grams a month in a reference to 1984. The problem is the reason PPI went down is because they raised last month's estimate by so much. It's actually higher than they previously reported what it was last month. But because they raised last month's number by so much, the number that they just reported from this month actually looks like a decline. Isn't it wonderful how our government statistics work? It really is just great. Let's get into some of the numbers, shall we? Headline PPI, 3.5% year over year. That is sharply higher than the 3.2% the market was expecting. Now, that would be a flat reading, but the only reason that reading is flat versus what it was a month ago is because they raised the number from the previously reported 3.3. So a day ago, it would have looked like inflation went from 3.3% to 3.5%. But since they quietly revised last month's number up to 3.5%, it looks like inflation stayed flat. Yay, government math. On a month-over-month basis, the headline number was 0.4% higher than it was a month ago. That's versus 0.3% expected. So that is also a miss high. And that actually looks like it went down from 0.5%. But the problem was the previously reported number was 0.2%. So they more than doubled the previous figure to make it look like it's going down. Yay, government math. On the core PPI, which strips out volatile food and energy, 3.6% year over year. Once again, sharply higher than the 3.3% that was expected. Another miss high. Now that is down from 3.7%. So yay, core inflation is going down. Oh, but the problem is that 3.7% number was previously reported as 3.5%. So the only reason it went down was because of that big upward revision to last month. Noticing a pattern here? Noticing a pattern, yeah. But wait, we got one more. Month over month, core inflation, 0.3%. That is actually in line with expectations of 0.3%. And yay, it went down from 0.4% last month. But wait, there's more. That's because last month, the initial reported figure was 0.0. So they raised the number from nothing to 0.4%. Now they're like, yay, it's gone down to 0.3%. Again, your chocolate ration has increased. So, look, guys, I don't know what happened last month. I don't know why all of a sudden this big revision to the December PPI statistics. I didn't see any big revisions to CPI yesterday. I don't know where it came from. I don't know what's going on there, but that's a really big revision, especially those core month over month numbers to go from nothing to 0.4%. That's a big statistical screw up right there. I don't know what's going on. Maybe our Doge brethren might take a look at the people putting out the numbers in PPI and tell us WTF is going on there. But besides, all the downward or upward revisions resulting in a downward trend, whatever you want to make out of that, guys, inflation missed high once again. Now, the interesting thing, the market does not care. Almost nothing moved. A little bit of wiggle in the candles. You had a big down and then big up. It ended up settling right back where it was. And then the market just started humming along. The market does not care about this stubbornly high inflation. And even yesterday, we had a big drop after that CPI print, which was hotter than expected, inflation trending in the wrong direction. The dip buyers came in and they bought the dip. The NASDAQ ended up closing positive yesterday. I don't know why the market doesn't seem to care about inflation. Maybe it's because, I mean, short of a nuclear bomb going off in an American city, nothing, and I mean nothing, will take this market down because number go up. No matter what, number go up. That just seems to be the way of things here. That is right up until that no longer works, and then look out below. But for now, the market doesn't seem to care that inflation is heading in the wrong direction. And speaking of inflation, did you guys know that tariffs are inflationary? Maybe we're going to probably have to say that a few times today. Reciprocal tariffs is the big news this morning. President Trump is meeting with Prime Minister Modi of India today, and he is expected to announce reciprocal tariffs. He made some posts on Truth Social to that effect today. Why is he choosing the day of this meeting with India? Well, India is one of the most lopsided tariff relationships the U.S. has. India has substantial tariffs on a lot of U.S. goods. The U.S. doesn't have a lot of tariffs on Indian goods. And so when you hear reciprocal tariffs, that means we're going to tariff you back. I'm telling, tit for tat, tariff for tariff. And that will disproportionately affect India versus everybody else. So, everybody's like, oh my God, tariffs are so bad, we shouldn't have tariffs. And then they say, okay, well, then get rid of yours. Well, that's different. So reciprocal tariffs is really just a tariff back. It's a bad idea. It's bad economy. It's bad policy, in my opinion. Yep, it's inflationary. There's that phrase again. But at the same point, if all the people are blasting tariffs, if they're putting tariffs on our stuff already, well, then maybe this is a great time to have that conversation. And I'm pretty sure that's the point all along. Is like, if you guys are going to preach free trade, then maybe, just maybe, you ought to practice it too. And also keep an eye on that Indian rupee. We talked about that a few days ago, how the Indian rupee had been weakening so substantially that the Reserve Bank of India had to step in and defend the currency very abruptly on Monday this week. I suspected that had more to do with Russian oil than anything. But now that I look at this reciprocal tariff story and how it disproportionately affects India, it's possible that the rupee has been weakening, anticipating some of these tariffs that are probably going to get announced today, unless they have some kind of breakthrough at the negotiating table. We got a lot of earnings today also. We got earnings from John Deere. Man, they were bad. Deere's earnings, Deere has been struggling for the last couple of quarters. It's not really a big surprise, but I really analyzed the numbers today. High double-digit declines for sales in virtually every category at John Deere. They're really hurting. We saw something similar in Caterpillar's earnings. The heavy equipment makers, they're suffering from a combination of factors. Number one, high interest rates are not good for this big capital-intensive equipment. Obviously, you got to borrow money to buy those things. But you've also got things like higher labor and higher fuel costs that farmers are struggling with. And we've got stubbornly low agricultural commodities, wheat, corn, soybeans. Those prices are actually way down, even though the cost of everything you need to produce them are way up, which means the farmers are hurting here. And if the farmers are hurting, you better believe that Deere is hurting as well. So we've got that one going on. Wendy's reported earnings. They were pretty good. We've seen a little bit of weak guidance despite a same-store sales beat. So it's a little bit more of that fast food news we've been seeing, kind of the opposite of what we saw with McDonald's, where they look like, yeah, that $5 value meal thing that McDonald's had done got people in the door, but they didn't really spend any more money. Wendy's is doing okay on that front. Cisco earnings, big beat and a raise. They're raising their dividend. They're increasing their stock buybacks. The maker of networking gear is still benefiting from the big build out in data centers. So Cisco is up on that news. They just reported a good quarter. And we have an interesting story coming out of the State Department. Somebody very quietly made a revision to the State Department's website to talk about some of their procurement contracts for 2025. Back in December, there was a line item in the contract for $400 million worth of armored Teslas. And on February 12th, yesterday, somebody went in and changed that contract to say $400 million for armored electric vehicles. Now, that's interesting. Couple of important points here. Number one, this has been there for a while, so this is not like a payment for services rendered politically, if you will. It doesn't look like a quid pro quo because this contract predates the Trump administration. This was put in place under Biden. That being said, why did somebody go in there and change the language to say from Tesla to electric vehicles? Maybe to avoid scrutiny, and there might be a little bit of a Streisand effect going on there. When you try to hide something, you draw attention to it. And since we're drawing attention to it, let's talk about this. Who will doge the Doge? My personal opinion, I love what Elon Musk is doing, scrubbing government spending, drawing attention to the ridiculous, laughable waste at government. And I think it would be funnier if it wasn't so sad and so catastrophic for the world and for the average working person. That being said, I think Elon Musk is doing amazing things, and I hope he continues. But you know what? Elon Musk is also the beneficiary of a lot of government contracts. So who is looking at Elon's government contracts? If we are really going to scrub and scrutinize everything, then that means Tesla and SpaceX also need to be scrubbed and scrutinized. And the people who scrub and scrutinize Tesla and SpaceX cannot be the CEO of those companies. That's what you call a conflict of interest. And therefore, somebody's got to doge the Doge. Who's that going to be? It's got to be somebody with no skin in the game. So Elon's contracts are fair game. Since we're all talking about this State Department website, why does the State Department need $400 million worth of armored electric vehicles? That is a legitimate question. Somebody besides Elon Musk and his crew needs to pull that thread. Last but not least, we got initial and continuing jobless claims. The data actually looks pretty good here. 213,000 initial claims. That's down from 220,000. And continuing claims, 1,850,000, down from 1,886,000. So the big wave of anticipated layoffs, we're now in the second month of the year. It still hasn't materialized. The pace of job losses remains low, although it is still hard to find a job once you've lost it. Why don't we shrink my big melon of a head and let's take a look at what's going on in markets this morning. Don't forget that like button and the subscribe button. It's written right there on the mug. So, hey, the mug says you have to. So like and subscribe for the algo, if you will, and come on back tomorrow because we do this every morning. Right now, the S&P 500 is up 9 points, 0.15% higher. The Dow, meanwhile, is up 90 points, 0.2% higher. I just want to point to this candle right here, guys. You see this little bit of volatility. We went down, then we popped up, and now we're kind of creeping up. This just kind of goes to show you the market just did not care about that PPI statistic. It really just blew it off. It's another statistic showing inflation is getting worse, trending in the wrong direction, and yet the market just doesn't seem to care. I don't really get that, to be honest with you. I think this blind optimism is really misplaced here. The NASDAQ, same story. It's up 58 points, 0.25% higher. Miraculously, the NASDAQ closed in positive territory yesterday after that terrible CPI print. Looking over at the DXY, we've got 107.79. That's down by 22 basis points or 0.2% lower. Speaking of miraculous, the DXY was actually negative on the day yesterday. Despite everybody adjusting their expectations for Fed rate cuts through the end of the year, I don't know if it was a combination of some of this tariff talk, maybe a lot of Jerome Powell's testimony before the House and Senate over the last 2 days. But whatever happened, we had a big swing down in the dollar yesterday after that initial surge on the CPI print. The market is really shrugging off this inflation data. Looking over at the bond market, we've got yields are reversing yesterday's gains. The 30-year Treasury is at 4.783. That's down 5 basis points. The 10-year, 4.566, down almost 7 points. The 2 years at 4.328, down almost 4 points. And the 1 month is unchanged at 4.332. So yields moving lower. Remember, guys, that's bonds moving higher. The price is moving higher. So we got a lot of bond buying going on this morning. Now, looking over at the commodities board, we've got gold is up a little bit, but it gave back about half of the gains this morning. It had been up more than $20 earlier before that PPI read came out. But we are back above that all-important $2,900 threshold for spot gold. We're at $29.13 here. That's up almost $9 or 0.3% higher. Spot silver, meanwhile, is at $32.12. That's down by about 11 cents or 1/3% lower this morning. Meanwhile, we've got copper is up by 1/3%. Platinum is pretty much unchanged here. Palladium is down by 1%. And WTI crude is moving lower once again, $70.70. Oil has shed a couple of bucks here over the last few days. It's down another 65 cents this morning or 0.87% lower. Looking over at Bitcoin, Bitcoin did not like that PPI report this morning. It's down about $2,000, $95,835 as priced on Coinbase. Still below that 50-day moving average. Bitcoin is having a hard time here, shaking this current price level. Also got some interesting news from Bitcoin this morning. U.S. Bitcoin miners disrupted by Chinese supplier under scrutiny. This is what happens when the president's trade war priorities are in direct conflict with the president's crypto priorities. You end up with a story like this where the industry's not really sure where to go with it. Crypto miners in the US are experiencing delays receiving deliveries of new equipment, threatening their competitiveness and profit margins as the Chinese juggernaut that supplies the bulk of their machinery comes under scrutiny amid a trade war. Recent shipments of machines made by Beijing-based Bitmain Technologies to U.S. clients have been delayed due to heightened customs and border protection scrutiny, according to half a dozen industry executives. The delays coincide with the U.S. Commerce Department's blacklisting of Bitmain's artificial intelligence affiliate Xiamen Sopco Technologies in January, when it accused the firm of acting at the behest of Beijing to further the PRC's goals of indigenous advanced chip production. Now, this is important, guys, because Bitmain makes 90% of the Bitcoin miners that are used in America. They pretty much are the market for Bitcoin miners. And, well, Trump put an additional 10% tariff on those miners starting on February 1st. Now, this is pretty interesting here. U.S. Customs has started randomly inspecting almost all of the airlifted Bitcoin mining machines since about 3 months ago, said Nuo Zhu, founder of China Digital Mining Association, who operates mining sites in the U.S. Officers are looking more closely at the machines while asking the brokers to show certificate of origin. And I would just add, when you are randomly inspecting almost all of the shipments, well, that's not a random inspection, then, is it? If you're getting everything at random, it ain't random. So Customs is targeting Bitmain's shipments here. I suspect this has to do with how they have moved a lot of their production into countries like Malaysia to try to get around the tariffs. So this is where the trade war kind of runs smack dab into the crypto priorities. And right now it's making life difficult for the crypto miners. All right, let's talk about the main story here. The producer price index this morning, it came in at 3.5% year over year. Again, that is versus expectations of 3.2%. So it is a big miss high. Now we got to refresh because these charts need to update. They still haven't updated the chart, but the previous month it had been, they did update it. Okay. This number, the December number, was previously 3.3. So it would look like this number is continuing to rise, but they raised the December number to show flat. But again, guys, take a look at this chart. Does this look like the chart of inflation that is moving sustainably towards our 2% target? No, it does not. All right, same question we asked yesterday. Does this look like it's on its way to 2.0? Nope, not doing it. Now, I mean, maybe if we zoom out. If we zoom out 3 years, well, no, it doesn't. It's been rising since June of last year, and it's June of 2023. It's been rising for a year and a half. Guys, PPI heading in the wrong direction. Inflation is not coming down on its own. The Federal Reserve's policy is not working. And I feel compelled to point this out. If we're all sitting here wondering, why is inflation not coming down? Well, let's point to this chart right here that says the supply of money is rising. M2 money supply, 21.692 trillion. It is up almost a trillion, over $1 trillion in the last year and a half. Why is inflation not coming down? Maybe it's because somebody keeps making more money. And I think the reason this chart keeps moving higher is because of private credit and their game of the floor is price discovery that they're playing in markets all over the country. I could be wrong about that. But guys, if the supply of money keeps going up, you should not be surprised when consumer and producer prices keep going up. That is how that works after all. Now, let's talk about the month-over-month number. U.S. factory gate prices rose 0.4% month-over-month for January of 2025. That is below the upwardly revised 0.5% in December, but above forecasts for 0.3%. This is the sixth consecutive increase after a 0.5% rise in December. Now, they're talking about some of the categories here. Over a third of the rise can be traced to prices for traveler accommodation services, which advanced 5.7%. Meanwhile, prices for goods increased 0.6%, the fourth consecutive rise, and above 0.5% in December, led by a 10.4% increase in diesel fuel. So a little bit of energy inflation there. The indexes for chicken eggs, beef and veal, gas fuels, jet fuel, and communication and related equipment also moved higher. So pretty widespread increases there. They're showing the month-over-month numbers. Again, we've been stubbornly high for several months now. Core inflation, meanwhile, the annual core producer price inflation in the United States was 3.6% in January, down slightly from the upwardly revised 3.7%. Now, this chart still not updating here. It's showing 3.5%, the previous number. Let's refresh it. There we go. Now it's showing the 3.7% number, the upward revision. And once again, I have to ask, guys, does this look like a chart that is moving sustainably towards our 2% target? If you answered no, congratulations, you've been paying attention and you get 100 million melon coin. On a month-over-month basis, core producer prices in the United States, which excludes food and energy, rose 0.3% for the month, following an upwardly revised 0.4% in January. Again, guys, stubborn inflation. It's just not going down. The Fed's policy is not working. I think, I don't know, do we need to restate it, that those rate cuts in September and in October, or was it November? I can't remember. Those 75 basis points or 100 basis points of rate cuts were unnecessary. And it was misguided. It was bad policy. And, well, I just can't shake the fact that it really appeared to have been politically motivated. But that's neither here nor there. Guys, inflation is just not coming down. All right. Now, here's something that's definitely not going to help. Today is the big one. Donald Trump's reciprocal tariffs post ahead of the meeting with PM Modi. And by the way, guys, did you know that tariffs are inflationary? I don't know if you knew that. I don't think I've said that in almost 5 or 10 minutes. But in a bold statement on social media, U.S. President Donald Trump announced that the United States would unveil reciprocal tariffs later on Thursday, marking a significant shift in economic policy. 3 great weeks, perhaps the best ever, but today is the big one. Some very Trumpian language here. Reciprocal tariffs make America great again, Trump posted, of course, in all capital letters on his Truth Social platform, signaling a major development in his administration's trade strategy. The announcement comes ahead of a high-stakes meeting with Prime Minister Narendra Modi set to take place soon. The two leaders are expected to discuss a range of trade issues, and the announcement of these tariffs suggests a potential change in U.S. trade relations. This strategy would essentially align U.S. tariffs with tariff rates imposed by other countries on U.S. imports. Under the policy, if a country like India, for example, imposes a 25% tariff on U.S. automobiles, the U.S. would match that rate on imports from India. The announcement has sparked concerns among economists who warn that such a move could significantly raise tariffs on goods from emerging market economies. Countries such as India and Thailand, which have higher tariff rates on U.S. products, would be the most effective. In contrast, nations with existing trade agreements with the U.S., like South Korea, are seen as less vulnerable. So pay attention to this one, guys. India, I think, would be disproportionately affected because India has some of the highest tariffs on imports from the U.S. out of any of our trade partners. And again, if you're opposed to tariffs, well, then get rid of your own. All right, let's talk about John Deere's earnings here. These were really bad. Deere stock slides as earnings fall sharply and guidance is for more pain ahead. So not much light at the end of that tunnel. Deere is still grappling with a weak demand environment with sales sharply lower across its core operating segment. Deere Co. stock fell nearly 6% early Thursday after the maker of agriculture and construction equipment reported first quarter earnings that fell sharply from a year ago and issued guidance for further steep sales declines. The Illinois-based Deere had net income of $869 million, down from $1.75 billion a year ago. Wow, that's a big drop, more than 50% decline in their net income at John Deere. Terrible numbers. The numbers were, however, ahead of the FactSet consensus of $7.7 billion. So I guess there's a little bit of a silver lining there. Now, let's see what else we got. Deere said they expect sales at its production and precision agricultural division, which makes products aimed at improving crop yields, to fall 15 to 20% in 2025. It expects small ag and turf sales to fall 10%, construction and forestry sales to fall 10 to 15%, and the guidance does not include any impact from tariffs by the U.S. or retaliatory actions by other countries. Production and precision ag sales fell 37% in the first quarter. The decline came amid slower shipment volumes, while operating profit fell 68% to $338 million, hit by shipment volumes and sales mix, which were partially offset by lower R&E and administrative production. Small ag and turf sales fell 28%. Construction and forestry fell 38%. Guys, these are just terrible numbers. High double digits across the board declines, higher interest rates, higher fuel, higher labor, lower agricultural commodity prices. John Deere is just really hurting here. The stock is down. All things considered, considering the numbers they just reported, I'm actually pretty impressed that John Deere stock is only down about 4.8, maybe 5% right now ahead of the opening bell. We'll see where that one settles for the day, but those are some really bad numbers from Deere. Now let's contrast that with Cisco, that is producing some really good numbers. Cisco Systems raises revenue forecast as profit and sales beat estimates. Cisco Systems increased its full-year revenue outlook as sales surpassed expectations in its fiscal second quarter, bolstered by strong demand for its technologies. The network equipment making company on Wednesday increased its fiscal year revenue outlook to between 56 and 56.5 billion. That's up from 55.3 billion and 56.3 billion, respectively. It now expects adjusted per share earnings of $3.68 to $3.74. That's up from 360 to 366. Analysts had modeled 56 billion in revenue and 366 a share in earnings. So really good numbers here. Also on Wednesday, Cisco approved a $15 billion increase to the company's share repurchase program, and they boosted their dividend to 41 cents a share from 40 cents. So a beat and raise, more stock buybacks, higher dividends, pretty good numbers here from Cisco all around. That stock is up 5.8. We got the opening bell is wrong. 5.2% higher for Cisco Systems. Let's see. We're going to skip over Wendy's because we've been running for a while. We got to talk about this one, guys. Again, I'm not like hyperventilating. Oh my God, Tesla's contracts, because this is an old contract. It's been around since it predates the Trump administration, but it does raise entirely valid questions that need to be asked, and nobody is addressing here. Nobody outside of CNN anyway. State Department removes mention of armored Teslas from its 2025 procurement list and replaces it with armored electric vehicles. Why does the State Department need armored electric vehicles? I don't know. Look, diplomats are targets sometimes. Maybe that's why. Why do they have to be electric? I don't know. Why can't they drive, I don't know, an armored Prius, save a little bit of money? Prius is stupid, I get it, but just throwing it out there. The State Department has scrubbed the mention of armored Teslas from its 2025 procurement forecast. The procurement document initially contained a line item that read armored Tesla production units, a reference to products from Elon Musk's electric vehicle company. It was listed as a 5-year contract and valued at $400 million, making it the biggest item on the list. The document on the State Department's website has since been revised. The same line item now reads armored electric vehicles. It's still listed as a 5-year contract worth $400 million. Now, here's the thing, guys. Somebody went in yesterday and changed it from Teslas to electric vehicles. Why was that change made? That's a legit, it looks like they're trying to hide the word Tesla. They didn't change the number. They didn't change the item. Maybe they're just not just forcing it. Maybe they're buying armored electric Chevys now. Maybe there's a perfectly reasonable explanation for this, or maybe this is the Streisand effect blowing up in their face. I'm pretty sure Tesla isn't getting $400 million. No one mentioned it to me, at least. Musk wrote on X on Thursday about the department's revised forecast. The initial document had a timestamp of December 13th, 2024. The revised document bears a timestamp of February 12th, 2025. So they just, again, it predates the Trump administration, but they just changed it yesterday. The State Department, the White House, and the State Department's point of contact for procurement didn't immediately respond to requests for comment. Guys, I think this story is a nothing burger. I think this was a stupid decision to go and make the change, unless they're just saying we're entertaining bids from other electric vehicle makers, in which case, good, maybe they're saving some money. But the point is, while we're scrutinizing all of this government spending, who is going to scrutinize Elon Musk contracts? If we're giving Elon this broad purview to go scrub government spending and make recommendations of cuts, which I think we should continue because we're getting rid of some ridiculous programs, then somebody independent with no skin in the game and no political bias needs to do the same thing looking at Elon's contracts. That's the only way to do this fair, and that will further legitimize the other work that Doge is doing if they allow that. So hopefully we hear something to that effect in the near future. Last but not least, let's talk about jobless claims. Initial jobless claims decreased to 213,000 for the week ending February 8th. That is down from 220,000 in the previous week. Guys, the layoffs just are not happening this year like they did in previous years. You can see the initial claims here for the last few months. They have been trending down, and they continue to do so. Now, on the continuing claims front, continuing jobless claims in the U.S. decreased to 1,850,000 for the week ended February 1st. That's down from 1,886,000 in the previous week. Now, continuing claims, they're not really trending down. They're kind of flat here, maybe a slight downward slant over the last 2 months or so. But it's still hard to get a job once you lose a job. The thing is, the job losses are not happening at an alarming rate. So the labor market, I don't want to say it is strong. It still doesn't look particularly strong to me. Otherwise, we would be seeing this number move lower. We're not seeing that. But at the very least, people are not losing their jobs like crazy. And so, well, that's a good thing, I guess. And I just want to say thank you very much to Mr. Zeeble Fritz. Thank you, Zeeb. Appreciate the gifted Nobody Special Finance membership, sir. Thank you. You are a gentleman and a scholar. Appreciate everything you do for the channel. And who is that lucky melonhead? Be sure and let Zeeble Fritz know your gratitude. JJ Watt, what's going on, brother? He says, we need a shirt stating, show me your tariffs. All right. Guys, don't make me laugh. It still hurts to laugh. Show me your tariffs. Yeah, walk down Bourbon Street screaming, show me your tariffs, and see what happens. Look, guys, the shirt thing's kind of on hold. That spring outfit is really rubbed me the wrong way. I still have not gotten my dirtbaggery t-shirt. And I had to get rid of the merch store because of the dirtbaggery that was exposed when I made a t-shirt about dirtbaggery. I may still do a video about that. I don't know. It's kind of small story, but it just really rubbed me the wrong way. Show me your tariffs. Look, show me your tariffs. How about no tariffs? How about if we can all recognize that tariffs are generally bad, as everybody's saying, then why doesn't everybody get rid of all their tariffs? Crickets. Nobody ever says that. All right. And I think that's the point. And that's really the only defense, in my opinion, for Trump's tariffs. All right. If other countries are going to put tariffs on our stuff, then they have no right to complain if we do it. I don't think it necessarily makes it right, but free trade is free trade. Free trade is not, we'll give you free trade and then you tariff our stuff. That's not how that works. So again, everybody, show me your tariffs and show me that your tariffs are zero is what I would like to see. Thank you very much, JJ Watt, for supporting the channel. Thank you, too. The Pasta Man says passive IRA investing leads to a lack of responses. Guys, I think when the dust settles from this bubble, from this mother of all epic bubbles, I think passive investing will be a 4-letter word, 2 words. I don't know. I didn't really think that through. But passive investing, the lack of price discovery. I mean, if there's one phrase that could be used to describe this market, it would be no price discovery. Nobody pays attention to what they're buying and what they're paying for it. We just have these people and we trust them. We act like they're smarter, which, by the way, have you ever talked to any of these finance bros? Half of them are freaking imbeciles. They are just arrogant a-hole salesmen who don't know WTF they're talking about. They're not particularly intelligent people. They're just dirtbags in nice clothes. That's really all they are. But we have this idea like, oh, our finance guys are so smart. They're the top % of every class. No, they're not. Some of them are, but most of them are just dirtbag salesmen. And they're taking your money and they're just pouring it into the market, helping themselves to a taste on the way out. They don't care what you're buying. They get their fee no matter what. And what are they buying? They're buying everything. They're not looking at it like, well, this one's too expensive. I'm not going to buy that one. This one looks a little like cheaper. Maybe I'll buy this one. That looks like a great deal. No, they're just saying, buy it all. I don't care. It's not my money. And then rinse, repeat that across hundreds of millions of people with their retirements, their pensions, 401ks, IRAs. Oh boy. Oh boy. Passive investing is going to, one day price discovery will return to this market, and just wear a helmet when that day comes, guys. That's all I can say. Wear a helmet because it is going to be a bloodbath. Good point, Pasta Man. Thank you, sir, for supporting the channel. Atomic Coyote says, talking with friends last night, and the Bank of England, South Korea gold shortage came up. Interesting. People are starting to realize what's going on in the physical metal market. You know, the crazy thing, Atomic Coyote, what's really shocked me the most about this is how the small denomination physical metal market is not participating. Somebody just sent me a message yesterday. I can't remember who it was. I get so many messages about how a lot of gold dealers are now melting down their small denomination inventory. They're sending it to the refiners, and the refiners are making good delivery bars out of it. That means, number one, they can't sell their small denomination metals. There's no market for it. The average person is selling his small gold, small silver. Why? Probably because he can't afford the cost of living, which has gone up. And so he's having to sell down his stack. He's using it for a source of funds. That means the dealers are swimming in this inventory. And if the dealers are sending it to the refiners, that means the dealers are eating the cost of shipping. They're eating the cost of melting and refining. It means the dealers are taking a bath on this stuff. And again, those dealers are hedging. They're shorting against their inventory to maintain neutral exposure. Well, the price keeps going up. So those shorts that they're doing to hedge their exposure are making their problem worse. So gold dealers are in big trouble here. And the fact that people are starting to talk about it more often, that could lead to even more problems, because once the rumor mill starts going, hey, maybe they don't really have the gold, that can become a self-fulfilling prophecy. We really don't know what's in any of the vaults. I mean, they publish their lists and everything, but at the end of the day, who knows what's really in there? Does the U.S. even have their gold? We haven't audited Fort Knox in, 70 years, 80 years? Who knows who's really got it? And maybe that's why you've got this scramble to get the metal into the United States. Maybe the banks know that day is coming. And when that day comes, physical ownership trumps paper ownership. And so they want to be holding it when that happens, because possession is 9/10 of the law. Thank you very much, Atomic Coyote. Appreciate the super chat, support of the channel. Uncle Fedster, thank you, sir. He says, happy Friday, Jack. Japan Free Trade Agreement 2019 excerpt. The United States will provide tariff elimination or reduction on 241 tariff lines. That is interesting. That is one of the Donald's agreements from 2019. Now, I haven't heard a lot about tariffs on Japan. Now I'm hearing about reciprocal tariffs. Does Japan still have tariffs on any of our stuff? I don't know, but that is an interesting line, and it draws the point. Whatever happened to the USMCA? Remember the US Mexico Canada agreement and how we were all going to get rid of our tariffs? Man, that everybody forgot about that real fast, didn't they? When the Donald came back into office. Look, tariffs are going to make a mess. I don't know if you guys heard, but tariffs are inflationary. We're going to pay the price of it. I hope when the dust settles from this, we can just all agree tariffs are bad and everybody stops doing it. That's my ideal outcome. We're a long way from that. It's going to get messier before it gets better. Thank you very much, Uncle Fedster, for supporting the channel. And thank you, everybody, for having your coffee with the Melon Heads. Don't forget, listen to the mug, subscribe, hit that like button on the way out. Thank you guys for supporting the channel. Thank you to my magnanimous Melon Heads on Patreon and YouTube. You guys rock. Hi, Mom. Hi, Dad. I love you guys. And everybody, till next time, live small and dream big.